Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now, let's look at the top 12 fundamentally strong stocks to pick in view of the Lok Sabha election result 2019. So, these are the fundamentally strong stocks from various experts with a holding period of more than 1 year. So, according to analyst Rismik Oza, head of the fundamental research at Kotak Securities Limited, let's look at some of his recommendations. So first is Mahindra and Mahindra. So there have been new launches in the UV segment which will drive the volume growth in the passenger car segment. So he values the M&M at 1000 rupees per share, out of which 319 rupees is derived value of subsidiaries. Next is State Bank of India. So this bank has negligible balance sheet risk. So he believes that the bank is well positioned to deliver strong earnings growth for the financial year 2020-2021. So this could see ROAs moving closer to 1%. So he maintains a buy rating on SBI with a fair value of 410 rupees, valuing the bank at 1.2 times the book rate value and 7 times the March 2021 expectations, and the earnings per share for the ROEs in the range of 15% in the medium term. Next is Colgate Palmolive. So this research analyst expects the revenue acceleration in the next couple of years, led by the market share gains and revival of premiumization trend in the category. So the earnings are likely to grow at a CAGR of 15 to 16% in the next 2 years. The discounted cash flow based fair value works to 1,400 rupees per share. And the last recommendation is Power Grid. So Power Grid has been able to fend off the competition on the back of lower cost of capital as well as capex cost. The existing projects under various stages of implementation assure earnings growth of 14% CAGR up to the financial year 2022 as expected. The Power Grid trades at an attractive valuation of 9 times the forward earnings. So this is a recommendation also. Next, let's look at the analyst recommendations by Amar Singh, the head of advisory in Angel Broking Limited. So his first recommendation is HDFC because he expects the company's loan growth to remain 22% over the next 2 years and the earnings growth to be more than 21%. His next recommendation is RBL Bank. The stock currently trades at 2.9 times its financial year's 2021 expected price to book value, which he believes is reasonable for a bank in a high growth phase with stable asset value. Next, we have Bata India, and he expects Bata India to report net revenue CAGR of 16% around to 3,497 crore rupees over the financial year 2018 to 2020 expected, mainly due to increasing brand consciousness amongst the Indian consumers. Next recommendation is Maruti Suzuki. Now, due to favorable business mix together with higher operating leverage at Gujarat plant, increasing Nexa outlets and improving the business mix, he believes that the company has further room to improve its margins. The last recommendation of his is Aurobindo Pharma because the company is expected to report a net profit to grow at 19% CAGR during the financial year 2018 to 2021, aided by acquisitions. The valuations of the company are cheap with respect to its peers and its own fair multiples of 17 to 18 times the value. Next, let's look at the stock recommendations by Narnolia Financial Advisors. And the first recommendation on their list is Larsen and Toubro. So this company has laid down an audacious target of order inflow of 10 to 12% with revenue guidance of 12 to 15%. The working capital is aimed at getting lower to 18%. The current bid pipeline looks strong with 9 to 10 lakh crore rupees worth of orders which are lined up, though the first half of the financial year 2020 may be impacted due to the ongoing election. The second half is expected to come back strongly. The capacity utilization of the country has improved to 74%, and it's reaching close to 80 to 85% utilization, which will open avenues for increased capex in the country, and L&T should be the key beneficiary. The next recommendation is ICICI Bank. So this bank has shown a strong turnaround on the asset quality front on account of decline in slippages as well as good traction in recovery and upgradation. Specific provision cover has improved to 71%, led by aggressive provisioning done by the management. So it has been rated BB and below rated according to the book, and it's continuously declining and stood at 2.99% against the 3.3% a quarter back. The majority of the recent corporate slippages were from this pool. Moderation in the NPA addition and improvement in the margins will boost the profitability in the financial year 2020. Management targets consolidated ROE of 15% in the near term, and it will relook at the target once the credit cost normalizes. Now, the next recommendation by Narnolia Financial Advisors is Ultratech Cement. So Ultratech Cement has posted a strong set of numbers with consolidated revenue growth of 16% on a year-on-year basis to 10,905 crore rupees and the profit after tax growth of 127% on a year-on-year basis to 1,014 crore rupees. The EBITDA margin has improved by 250 base points on year-on-year basis to 21.4%, led by lower power, freight, and other expenses. Considering recent upsurge in crude prices, the freight and power costs are expected to increase slightly, which may have some impact on the margins in the upcoming quarter. The company has posted 14% year-on-year growth in volumes, primarily led by strong demand in affordable housing projects. Going forward, general elections may impact some demand in the beginning of the financial year, but post elections, infrastructural spending and housing for all scheme will likely gain momentum, which gives us strong volume growth visibility for the rest of the year. The integration of the UNCL and JP assets is now getting stabilized and is likely to achieve break even in the next fiscal. And the last recommendation is Britannia Industries. So, the financial advisors expect the strong new product pipeline and distribution expansion, which has grown 2.8 times in the last 5 years, to drive the volume growth, while higher saliency of premium product in the mix and judicious price hike will help in expanding the margin. The company will continue concentrating on new launches, newer categories, and continued renovation in the existing product portfolio. The company clocked 7% volume growth in the fourth quarter financial year 2019, and the innovation contribution in the financial year 2019 stood at 4.5% and targets to take the same to 9% in the financial year 2020. Going forward, the company will commercialize 3 lines in the next 4 months at the Ranjangaon plant and come up with innovation in premium cookies, crackers, premium creams, health, dairy, and adjacent businesses in financial year 2020. So these are the long-term recommendations. So you can buy these stocks and hold on to them for at least a year. And as you can see, you can invest in these stocks. So you can create an account with Alice Blue and you can invest in these stocks through your Alice Blue account. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you would like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robot trading software for free.